More than just business news, we're news for business people.
Good morning. You're watching DayBreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let's look at the headlines. Asian stocks falter despite Wall Street closing in the green as Trump says the US is working on another list of Chinese products that could attract higher tariffs. Now, US President Donald Trump orders his administration to consider additional tariffs on Chinese goods worth $100 billion, despite maintaining that the two nations share a very good relationship. Facebook's chief operating officer Sheryl Sandberg tells Bloomberg that she takes responsibility for the data breach at the company and defends founder Mark Zuckerberg's leadership. And Indigo says it's not interested in bidding for Air India in the current structure. With that, let's turn to the international markets, and US equity indices closed in positive territory on Thursday for their first three-day winning streak in a month. Bloomberg's Abigail Doolittle tells you what happened during that Wall Street session.
U.S. stocks finished higher for a third day in a row on Thursday, led by the Dow, which climbed by about 1%. The S&P 500 finished higher by about 0.7%. The Nasdaq lagged a bit, up 0.5%. But this trading action did put each of the major averages on pace for a second weekly gain in a row. This as investors found relief over the idea that a potential trade war between the U.S. and China is probably not imminent. Now, as a result, many of the big industrial names rallied, rebounded back, such as Boeing, Deere, and Caterpillar, and there was strength for the FANG trade as well. Facebook, Amazon, Netflix, and Alphabet all climbed on the day. Facebook and Amazon by more than 2.5%. It was a broad-based rally, too. 10 of the 11 S&P 500 sectors traded higher, materials and energy leading. Healthcare finished down, but just fractionally. Now, a real area of weakness, though, were the chips, down about 1%. This is UBS-initiated coverage on the sector, but on Micron and Texas Instruments specifically with sell ratings, this on concerns about the cycle, among other reasons. And NVIDIA, separate to that bearish UBS call, fell as Citron Research said the stock will be lower, quote unquote, soon. But when the stock gains are paired with Haven bonds and the Haven yen falling, Thursday's Wall Street session was certainly risk on. In New York, Abigail Doolittle, Bloomberg News.
But the cues aren't positive for today's Wall Street session, and in fact, the S&P 500 futures were down over a percent, now about 1.4% this morning, and here's why. President Donald Trump has said that he is ordering U.S. Trade Representative Robert Lighthizer to consider additional tariffs on $100 billion worth of Chinese goods. That's the latest salvo in what has already become a tit-for-tat exercise between the two leading economies in the world. Bloomberg's Joe Bobzik tells you the latest in this report. Listen in.
This is a dramatic and rather surprising escalation of what up till over the past few hours had seemed to be something that was under negotiation, with the president's chief economic advisor, Larry Kudlow, saying that they were engaged in delicate talks with Beijing. Also, along with this order, Trump did do something that suggests that they're anticipating another serious response from China. He directed the Agriculture Department to take whatever steps are necessary to support U.S. farmers, because the Chinese response really was directed primarily at the farm states, soybeans, wheat, pork, and beef, and other products that are one of the biggest cash crops for U.S. farmers, and China is one of the biggest customers.
We're going to see the fallout, of course, and any response, Joe, in China to these new threats from the White House. But we also heard from the president saying again that the EU isn't treating the U.S. fairly on trade either. So it looks like the EU is back in his sights again.
Yes, and it's rather curious because at the same time, the U.S. is looking for other partners, other trading partners, including the EU, to act with the U.S. in terms of punishing China and putting pressure on China. So ramping up the rhetoric against the EU would seem to be a bit of a counterproductive bit at this stage, and they have until March 1st the exemption from the steel and aluminum tariffs, which the president will be reviewing doing. He seems to be conducting this a bit on two fronts, though it remains to be seen whether they'll actually act to impose the steel and aluminum tariffs on the EU.
Well, the last move by the Trump administration on tariffs elicited an immediate response from China. That may not happen this time around because they're in the middle of a 4-day holiday. But with that, let's look at the Asian markets and the markets that are open, in fact. The Japanese Nikkei is down in trade, understandably, based on the cues that have come in from the US markets. And Trump administration saying that there might just be additional tariffs on Chinese goods. It's down about 0.2%. Let's turn to the Indian market now. Darshan Mehta and Agam Vakil are here to set us up for the day's trade and also to tell us what's happening in the futures and options space. Darshan, US future is down, indicating a weak start.
See, that's exactly what happened. Despite the US markets being up, the futures are down significantly, and that's why the SGX Nifty, the Asian markets are down in trade. So the SGX Nifty is down almost 50 points at this point of time. So, you know, some of the major gains that you may have seen yesterday may be wiped off because the day before we saw 150 point downtick. So pretty much it will come in at the same level 3 days ago. Now, if you're looking at what happened as far as the ADRs is concerned, no doubt the equity markets were robust in the US. So Vedanta, ICICI Bank, HDFC Bank and Tata Motors did manage to rally in trade. So the ADR picture was decent. What didn't do well was Wipro. IT as a pack has not been doing well on the US markets, given the fact that you've been seeing how NASDAQ is performing in trade. Now, as far as crude is concerned, it's been subtle for the past few days. It's down almost close to 0.6%, but we are coming in below the $68 barrel per mark on the Brent, and WTI may probably go in below the $63 barrel per mark. The close on base metals on the LME was rather strong. If you're looking at most of the base metals, they managed to end with a positive bias. So aluminium was up almost 1%, copper was up over 1%, nickel was up over 1%, and tin was up close near to 1%. The only sore point was zinc, which was down almost 0.5%. But Chinese markets, the data hasn't updated, so we don't know what exactly is happening as far as the Chinese markets are concerned currently. As far as gold is concerned, most of the precious metals, gold is trading up almost 0.5%. Platinum and palladium are trading well in trade today. So that's what's happening as far as gold is concerned. As far as you know, the flows are concerned, FI has sold in almost 100 crores and DI has bought in 615 crores in the cash market. So that's the trend on the FI side. Now, what happened yesterday? The markets managed to rally. The Nifty Bank, mid cap and small cap, all of them rallied over 2% in trade on the back of a strong rally that happened yesterday. Metal did well, real estate did well, and the PSU Bank Index was up almost 5% in trade. So the traction was clearly broad-based. The Wix fell in almost 10% because on the back of a strong rally that happened in trade yesterday. What happened? Only two Nifty stocks managed to end with the negative bias, Cipla and Bharti Airtel, but it was the banks that led the rally. So ICICI Bank, Kotak Bank and HDFC Bank, the private banks managed to rally up 200 points on the Nifty. But Agam, 200 points on the Nifty, but we're down almost 50 today. What are the FNOQs indicating?
Well, at least in terms of yesterday, it was a very good day of trade for those who were long in the markets, and about 200 points up move coming along. And clearly we did see some short covering as indicated by the decline in open interest. Let's also take a look at the Nifty Bank futures, and there it's the same. We've seen a decline of as much as 12% in open interest, again indicating short covering. With respect to the India Volatility Index, as one might expect, it came off quite substantially because of the fact that we saw such a rise in markets, but also on expected lines. We've seen the Nifty put-call ratio move back above the mark of 1.4. Now, in terms of the way we've seen changes in open interest, considering the fact that the Nifty moved up 200 points, we started seeing a little more writing in the 10,200 put. And, you know, we did see a little bit of a short squeeze for those, you know, who had big positions around that mark as well. But going in, we're taking a look at some of those stocks where Reliance Communications moved up around 4.5%, and we've seen longs coming in. And the other stock that we're watching out for, Shriram Transport Finance, that also moved up by as much as 5.7%. So we're looking at longs there, among many other stocks which saw substantial longs. As you may have noticed, the advances PIP declined by quite a margin.
Thanks so much for that, Hakam. Now, the big event of yesterday was the Monetary Policy Review, and the Monetary Policy Committee started the new financial year with a status quo on rates. The MPC cited upside inflationary risks and maintained its neutral stance on policy. But more importantly for the banking sector, the RBI has deferred the adoption of the Indian accounting standards by banks for a year on account of incompatible formats and unpreparedness of banks. Also, a quick mention here of another piece of information that came in yesterday, not from the Reserve Bank of India. It turned out the Reserve Bank of India transferred additional 10,000 crore rupees as interim dividend to the government in the financial year ended March, according to a senior government official who spoke to Bloomberg Quint. But now turning back to the monetary policy and what was discussed yesterday in yesterday's press conference, and of course in the monetary policy statement, experts believe that given the red flags raised by the RBI on inflation, we could very well see a prolonged pause and no rate action in FY19.
Firstly, I do think we are in for a prolonged pause, at least, not before the next 3 or 4 policy review meetings are we likely to see. So, only when we come into October, when the inflation trajectory has actually started coming down from the peak that we expect in June or July. From there, when it's well on its way to coming down towards in the second half, will there be any thought of moving on policy?
What's clear now is what the thresholds are for the RBI. I think if inflation is projected to be around 4.5%, they will be quite sanguine about that. I think if inflation forecasts are closer to 5%, that would be the trigger for tightening. Inflation would really have to surprise on the downside and consistently be projected to be below 4% for the RBI to cut rates. So I think the bar for cutting in this environment is very, very high. Remember, one other risk the RBI spoke about was the fiscal, and in the monetary policy report that accompanies the document said that they actually believe there's a very high it's likely that the fiscal deficit will slip again this year. So I think the bar for cutting is just very high. Our own sense is if the MSP increases go through and the government's determined to push up food prices, that the next move will be a modest tightening. I don't think there'll be aggressive tightening, but we still think sometime in the second half of the fiscal year, you probably get a 25 basis point hike as inflation heads towards 5%. So that's our baseline view.
We too are looking at an extended pause for the timing. This 2018, at least we're not calling for a rate hike at this point in time. Of course, we do have upside risks that we've already discussed in detail. But one thing what we need to really realize is that growth, while yes, all the high frequency data is suggesting an uptake, but it's still not really, every pocket or every sector is still not up and running. And I think that in itself will warrant a pause, given that we're not looking at a runaway move.
Well, of course, we'll have to wait and see how that pans out. But meanwhile, there's a lot of conversation about essentially various other aspects of the RBI monetary policy, and also what was discussed with regard to the banks and how they will plan the next financial year with regard to moving to the Ind AS standards. But meanwhile, let's find out what brokerages are making of the monetary policy and what was discussed yesterday. Shraddha Babla joins in with an analysis. Shraddha?
Well, Alex, the key takeaway is that most brokerages say they were taken by surprise with respect to the downward revision in the RBI's inflation projection for FY19. So you have Nomura, which has said that the downward revision is a positive surprise. They've said that the lower inflation projection rules out any imminent tightening of interest rates. They're expecting repo rates to be left unchanged throughout 2018, and what really adds to their confidence is that the recent banking sector developments have raised some concerns about the sustainability of the growth upcycle. So they expect RBI to keep the repo rate unchanged in 2018. However, they have warned that the coming policy meetings are still prone to a higher risk of RBI shifting this policy status quo. Nevertheless, for now, they remain neutral. We have Citi, which has said that if RBI's new CPI forecasts for FY19 do materialize, then the need for policy action in FY19 will be minimum. So again, they also are of the view that they couldn't possibly be tightening, at least in the near term. They've said that the CPI projections could potentially be revised upwards in the August policy, but that definitely rules out any policy move, at least in the June policy review of the RBI, and that they say supports the further long pause view. They've said that the current 10-year benchmark bond yields can further drift lower, closer to that 7% mark versus the 7.18% that we saw yesterday. However, given that persisting medium-term challenges do remain, they have said that a sharp rally in the Indian fixed income beyond the initial exuberance may be hard to sustain. So bond yields could see some more downward movement, but there's a question mark on whether they will be sustainable given uncertainty of how inflation move in the second half. But clearly, brokerage is assuming that for at least 2018, they don't see any interest rates hikes coming in.
All right, thanks so much for that, Shraddha. You know, there was a very interesting piece of information, in fact, a statement coming in from the RBI. Over the past few months, it's repeatedly said that it's not supportive of Bitcoin transactions, rather of cryptocurrency transactions. But yesterday, the Bitcoin craze probably backfired for a lot of investors in India. The Reserve Bank of India virtually banned cryptocurrencies, and the central bank has essentially said that all regulated entities are barred from providing services to any individual or business dealing in digital currencies. These entities have been given 3 months to unwind their positions. What does that mean for cryptocurrencies in India? Well, to find out, Bloomberg Quint's Tamanna Inamdar spoke to Shivam Thakral, who is co-founder and CEO of BuyUCoin, and Vishal Gupta, who is chief architect internetdollars.org and also co-founder Digital Assets and Blockchain Foundation of India. Listen in.
This has essentially created a situation where today you have millions of people who have invested in various cryptocurrencies, and they hold this asset. Now, just the fact that the banks are not going to allow people to transact with this cryptocurrency transactions through their bank accounts, and if they do so, they are going to be shut down, essentially means these have become dead assets for people who are holding on to them. And this is going to have a huge repercussion because majority of the investors in this market are from middle class to upper middle class. And there is a huge investor base and a lot of people who have put some part of their savings into these investments. And so how are we going to ensure that these people can have some kind of a recourse? Because if you disallow trading, there is no exit to this, because effectively you can't convert it to cash. Whom do you sell it to?
Absolutely. Let me come to Mr. Thakral on that. What does it do to businesses like yours, Mr. Thakral?
Basically what I understand is obviously it's going to affect our business. There will be the main thing which was there was a banking system which was very helpful for transacting the money and the payment gateways which we were using, that will be abandoned by the banks itself because of this circular. But it's not an end for the cryptocurrencies, the cryptocurrencies which came into the existing just because they want to just transact the money without any centralized bank or any centralized authority. And they were able to do. If you want to just transfer your this money from here to any other part of the country or any other part of the world, you can easily do through cryptocurrencies. You don't need any banks in between. But if you basically you need to get cryptocurrency, you need a banking system. So what government is doing, they are stopping this thing. They don't want more people to get involved in this cryptocurrency, as many of the small investors don't know exactly how it works, and being scammed by some fake cryptocurrencies also. So government is just taking a security measure.
All right. Well, with that, let's take a check on the rupee and the bond market. Saloni Dharka has all the updates there. Saloni?
Good morning, Alex. So the rupee yesterday recovered from deep overnight losses and ended 18 paise higher at 64.96 levels against the dollar after RBI lowered its inflation forecast and revised its growth outlook upwards. Now, highly positive market sentiment along with a slew of positive domestic cues, including forecast of a normal monsoon along with encouraging services PMI data, added to the rupee recovery despite higher dollar overseas. However, despite all the positive cues, the home currency is still headed for a second weekly loss. Well, speaking of the debt market, sovereign bonds rallied for the third consecutive day yesterday as traders cheered RBI's decision to trim inflation forecast, and hence we have seen the yields on the 10-year benchmark security dropping nearly 17 basis points to end at 7.13%. Now, in terms of flows into debt market, global funds increased their rupee debt holdings for the second consecutive day. They infused close to 580 crores into their debt portfolio, according to NSDL data. Well, on the global front, dollar index ended 0.4% higher yesterday as traders ahead of the US jobs data, which is scheduled for today. Also, traders await a speech from Federal Reserve Powell, which is scheduled for today later in the day. Elsewhere, both euro and pound slipped in trade yesterday and ended lower against the dollar after a sharp drop in services PMI data. And lastly, speaking of dollar rupee, it is trading at 64.90 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Let's move on now. Indigo says that it does not have the capability to turn around Air India. This comes a week after the government invited final bids for the airline. Indigo's statement clearly states that it's only interested in Air India's international operations and the budget arm, that's Air India Express. But there may be some other factors that made Indigo apprehensive. Sajit Mangat sums up all the details in this report.
The issue behind this is primarily because Indigo was always interested in the international routes of Air India and Air India Express, and government has clubbed Air India along with Air India Express and Air India Stats as part of the divestment process. This is something which Indigo says is not viable and it can't bid for it. Aside of that, there is other issues which are also there, which basically means the debt which will be taken over by the bidder, which is nearly 33,000 crores of debt. It also employees is also another issue which will be one of the biggest reasons why Indigo may not be interested in taking over the entire operation. Now, what Indigo is trying to hint at is that the government should have looked at bifurcating the international and domestic operations and asked for bids based on these operations. But government has come out as a combined entity for the entire divestment process. As per the eligibility criteria, the government has asked for 5,000 crores of net worth for any bidder to come and bid for Air India and its associates. But at the same time, it has given a leniency or exemption to the Indian carriers from this 5,000 crores net worth criteria. It has allowed a consortium to be formed, which could include Indian companies, but the Indian company would have to own more than 51% in the consortium, and the consortium's net worth should be more than 5,000 crores. So, as we stand currently, it's a big setback for the entire divestment process of Air India, because globally some of the airlines like Qatar has come out and said that even they won't be able to bid for it because Air India Express is part of the entire Air India combination, and unless the government separates them or they separates the international and the domestic routes, it will be difficult to bid for such an airline, even though many would be interested to look at the kind of slots and the bilaterals that the national carrier carries.
All right, let's look at a list of the stocks in news, and to tell you about all of those stocks, Shraddha Babla is back. Shraddha, what do you have for us?
Alex, starting off with Indian Oil, actually a couple of acquisitions based news today, but Indian Oil has acquired 17% stake in Mukhaizna oil field in Oman for $329 million. You also have HCL Tech, which has acquired a life sciences and consumer services provider, C3I Solutions, and that's for about $60 million in cash consideration. You have Amtech Auto lenders, where the lenders panel has approved the resolution plan by Liberty House that came out yesterday night. That about, we're also tracking Shobha Limited on the back of its fourth quarter updates that they have shared. So the new sales volumes have risen by a strong 40% to 10.15 lakh square feet, and the new sales value has risen, however, by a lower 30%. That's because price realizations have corrected by about 7.5%. You have Magma FinCorp, whose 500 crore QIP opened yesterday evening. The floor price has been set at 154.47 per share. That's a good 6% or so discount to yesterday's closing price. Sona Koyo promoter JTE KT Corporation also proposes to sell 35 lakh shares or 1.8% of its equity via an OFS today, where the floor price has been set again at a discount to yesterday's closing price, floor price at 85 per share. You have Majesco, which has said that Tier 1 insurer has signed a 3-year deal with the company for application management services, so a deal win for Majesco. Kridan Infra has won orders worth 134 crores. And lastly, on the back of bulk deals with tracking Awadh Sugar, where the promoter Ronson Traders has bought about 0.5% stake yesterday. So all of these stocks to keep an eye out for.
Thanks so much for that, Shraddha. Let's move on now to one of the big stories this week, in fact, and that was the update from Facebook on the fact that there were data breaches. And in fact, Sheryl Sandberg, who's Facebook's second-in-command, spoke to Bloomberg, and she said that she personally made some mistakes and that the company had been too slow to respond after this discovery of the massive data leak to Cambridge Analytica. That's, of course, the firm that worked on the Trump campaign. Listen in.
I feel deeply personally responsible because there are real mistakes that we made and that I made. And I think when you take a step back and you think about what's happened here, for a long time, we were really focused on building social experiences, and a lot of good happened because of those. And when we found problems, we would shut down that problem. So the specific case of the Friends of Fen sharing that happened with Cambridge Analytica, that specific case was shut down in 2015. But what we didn't do until recently, and what we're doing now, is just take a broader view, looking to be more restrictive in ways data could be misused. We also didn't build our operations fast enough, and that's on me. We had 10,000 people working in security at the beginning of the year. At the end of this year alone, we will more than double to 20,000. We are massively investing in smart technology, and we're doing all of this to make sure that we get to a place where we can proactively protect people's data.
Facebook has constructed a business model that leverages personal data that users share with Facebook, and you are the chief architect of that. Assuming the business model will evolve as a result of all these changes, how will that impact the bottom line? How will that impact profitability?
We've never run this company for short-term gains, and we've never run this company to maximize profits. We run this company for the long-term health of our community and business. We announced 2 quarters ago in earnings that these investments are big and they will impact profitability. And that's okay with us because it's the right thing to do. We want to make these investments. We'll update at the next quarter.
So, talk a little bit about, you mentioned that a few advertisers have paused their spending as a result of this. How big is that pause? Can you give us any color?
It's a few advertisers, but what matters is not how big it is. What matters is the questions they're asking. So advertisers are people. They're people who use Facebook. So are investors. And everyone wants to know the same thing, which is, are you protecting people's data? I think the advertisers and people who use Facebook also want to know that the good things will continue. And those are really important as well.
Mark has been asked if he's the right person to lead Facebook. Do you believe that he is? He said he is. Do you agree?
I believe deeply in Mark. Mark had a vision for what social services and social sharing could be, and that vision remains really important. Mark also, along with me and all of us, take full responsibility for what's happening here. And we're making a very important shift. We're going to keep building social products because sharing is so important to people all over the world. And we're going to be much more proactive. Emily, I'm not going to sit here and say we won't find more problems. We will. We are going to continue to find problems. We are going to continue to shut down situations when we find them. And this is a forever thing because security is an arms race. This is something that we're signed up for, not just now, but on an ongoing basis.
Well, privacy is something that everybody is going to have to think about at some point, whether it's their own, and also companies have to figure it out over the course of the next few years. But that's all we have time for on this edition of Daybreak. Up next is All You Need to Know. Thanks for watching.